Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague here.
Hello there, I'm Yatin Mota.
Yatin, what a roller coaster ride, wild swings, manic Monday, what have you, everything happening on the same day. Given the fact that we saw a triple-digit up move at the start, it was like blink and then you saw a triple-digit cut coming in on the index. So it just took a sharp U-turn right at the open. And throughout the day, we saw the volatility play out.
Correct.
In fact, the India VIX index was also up in excess of 5% today, crossed that 14 level as well. But the sell-off kind of abated slightly. We didn't really clock a triple-digit loss, but we did end below that 24,800 mark. But the cuts were deeper in the broader end of the markets. Mid and small caps indices lost in excess of 1.5%. Even if you look at the breadth, dismal. Almost 1:4, that was the NSE advanced decline ratio. Aside of that, Yatin, most of the sectors were trading in the red. Bank Nifty started the day on a very strong note, helped by numbers from HDFC Bank. But you had Kotak Bank and RBL Bank, all these other banks not reporting great set of numbers, and that also played out on the Nifty Bank Index. Autos were the sole sectoral gainers today, Yatin, helped by Bajaj Auto. Even the likes of M&M Maruti picked up pace, but most of the sectors were trading in the red, and the ones that saw sharp cuts were the likes of metals, realty, IT. All of these indices lost in excess of 1%, Yatin. But in terms of individual movers, Bajaj Auto, as I mentioned, top Nifty gainer. HDFC Bank, healthy set of numbers. Divergent numbers coming in from banks. Asian Paints, again among gainers. Other auto names like M&M, Eicher, and even Tech Mahindra, good set of numbers and reacting to that. On the flip side, Tata Consumer, earnings disappointment, disappointing volume growth as well. All that weighing in on the stock. In fact, at one point was down somewhere around 9% or thereabouts. Cooled off, as in recovered some ground, but although 6 to 7% kind of cut coming in there. Kotak Bank, Bajaj, Finserv, BPCL, ONGC were some of the other losers. But lots of earnings reactions in the broader end of the markets. I want to talk about Tata Group of stocks, Tata Chemical, Tata Investment. Again, the Tata Sons IPO buzz is back. Because of that, these stocks are
I think buzz is back, but still unconfirmed. I think no point in speculating because shares are volatile. One day the news comes on the positive side, the other. We are back on this Money Control live stream. There was some small technical glitch, but continuing with Bajaj Auto, and today we had Rajiv Bajaj, speaking to CNBC TV 18, in which he said that the management, commentary was slightly, confusing. There was some confusion created, but he clarified that they will be growing better than the industry in the festive season. And most importantly, he looks for a fair value of Bajaj Auto shares, which is at 20,000 rupees a piece, almost double the current market price. And promoters might look at buying stake from the open market. And post those comments, the shares of Bajaj Auto went up 4%. Tejas Network, good set of earnings, stock went as high as 20%, but settled 12% higher. We also had Amber Enterprises, that stock moving 17% in trade. IndiaMart, clearly numbers being healthy, but the internals on the customer collections and customer additions were quite weakish. Post with the shares fell 18% in trade. RBL Bank also asset quality pressure seen. Stock was down nearly 14% post that. But overall, if you look at the mid cap, small cap index, it was down by nearly 1.5% each, despite the fact that the markets were marginally lower. So the mid cap end of the market clearly underperforming in trade, Nandita.
That's true, Yatin, and all the earnings that are trickling in, some of them have been major disappointments. If you look at Ultratech, even CG, that stock, the margin expectations of 14 to 15% came in at 12%, and it played out on the stock prices as well. So lots of reactions because expectations were quite high, you could say, and all of these companies disappointing in terms of numbers, and that's clearly weighing in on sentiment. One case in point, of course, Tata Consumer. Top drag on the Nifty. In fact, it has dragged the entire FMCG pack down with itself. The FMCG pack itself is down somewhere around 1% or so, and it is down for the fourth straight day. Yatin. The numbers were kicked off by Nestle, and volume degrowth, that seems to be the trend emerging so far when it comes to the FMCG pack. For Tata Consumer in particular, the stock saw its biggest single day drop since Feb 2022. Let's look at the internals. Beverage business revenue declined by 3%. We have volumes declining by 4% on a YY basis. Clearly soft demand, that is something that's weighing in on volumes. The tea market share also declined by 20 basis points, Yatin, and management has said that the tea business was impacted by subdued category trends. But they are starting to see synergies when it comes to Capital Foods and Organic India as well. These acquisitions, by the way, have done well on a sequential basis. Aside of that, if you look at the ready-to-drink business, that saw a decline by 11% on a YY basis. Growth business grew by 15%. Analysts were hoping for a 30% growth in this segment. That also came as a big disappointment, half of what analysts were really expecting. The food business organic revenue grew just about 9%, and volume here as well grew just 1%. So, international business, that was some bit of a positive. That grew somewhere around the margins there grew about 15% vis-a-vis 10% on a YY basis. And as I mentioned, the recent acquisitions have also done well. But analysts say that urban slowdown is something that is clearly visible, signs of that, and food inflation tends to pinch urban consumers more, and which is what is playing out. And some of the analysts have also pointed out that stocks have seen profit booking given the fact that earnings are not keeping pace with the kind of positioning that was done before earnings. And of course, some of them say that they could see deeper corrections because these are valuations wise expensive stocks, and any earnings disappointment tends to weigh in quite heavily. But let's also take a look at what brokerages are saying. ICICI Securities has downgraded the stock. Target price has also been cut to 12.25 vis-a-vis 13.85 earlier. They've also factored in the steep inflationary period, and FY26 to FY25 earnings estimates have been cut by as much as 7 to 8%. Goldman Sachs neutral on stock, target price of 1,050. They've also cut EPS estimates by 10 to 14%. Morgan Stanley, however, remains overweight, and they've also although cut the target price slightly, which of course, they've said that market share focus over margins will be key going forward. And the rural demand, although is recovering gradually, it's the urban demand that is softening, and that is pressuring, the company's performance as well. Looking at, how the street is really positioned, 29 analysts out of them, I think 22 of them still have a buy rating.
Correct.
6 of them have a hold, while 9 have a sell rating. But, looking at the stock performance on a YTD basis, it's down 6%. Even the monthly and 6 monthly charts, you will see, negative returns. But of course, and earnings disappointment, could really exacerbate the kind of weakness that we have seen today.
Absolutely, and Tata Consumer, clearly the urban slowdown is impacting the sales numbers. Obviously, the key thing to watch out for will be the Ching's, which is the foods business that they recently acquired, how the ramp up happens there. But IndiaMart, we call it the accident of the day because the shares dipped as high as 20% in trade, and the reason was that the customer addition was quite slow according to brokerages, and most importantly, the collections from existing customers also did not show very big growth. Yes, on a year-on-year basis, numbers were in line with expectations, but you have Jefferies, which has downgraded the stock of IndiaMart to a underperformer from buy. The target has been cut to a level of 2540. Now, Jefferies says that the company's subscriber additions are quite soft, and for the share price as well as the brokerages to really look at the stock, we need a 10 to 15% kind of a growth in the customer addition numbers, because of which there could be some near-term pressure till the time it doesn't happen. Now, if you look at the softness that continues also in subscriber additions, the growth is slow there. And also, if you look at the collection growth, that is moderating to nearly 5% on a year-on-year basis, which is a key negative from the Q2 numbers. Obviously, apart from the overall subscription numbers and subscriber numbers, Jefferies has cut the EPS estimates by up to 12% for the next 2 financial years, and probably on the back of earnings downgrade and share downgrade, we saw a clear downtick in the share price of IndiaMart today.
That's true, Yatin. The management was also there on CNBC today, and they've said that they've got caught on the wrong foot here, but they expect H2, second half, to be better than the first half. And they have also said that collections should grow in double digits for the next couple of quarters. However, I also want to point out that some analysts have pointed out that the correction may be overdone in the stock price, and that they just need 2 to 3 quarters to turn around their growth rates, and they're not really willing to throw in the towel yet, because it's a good business. That's what they believe, and they believe it's a good platform for SMEs and MSMEs as well. So that was about IndiaMart. But the other stock of the day, or accident of the day you could call it, was RBL Bank. Poor numbers, shares slipped to a 52-week low. Profit growth profit growth was quite poor. Profit had fallen 24% on a YY basis. Even the margins shrunk to just about a little over 5% vis-a-vis 5.5% on a YY basis. Asset quality challenges, obviously asset quality deteriorated, which is why the numbers were so poor. The weakness came in from credit card as well as micro lending, MFI business. And it may take up to 9 months or so, according to some officials from the bank, for the margins to recover to the 5.4 to 5.5% mark. Provisions also saw a very sharp increase, driven by increased stress on asset quality, and management is expecting a similar trend when it comes to credit costs, which also, by the way, remained elevated. In Q3 as well, credit costs are likely to remain elevated. Now, a month ago, RBL Bank had stated that it intends to grow its credit card portfolio at a moderate pace of 12 to 15% vis-a-vis the industry average of 25 to 30%. It had started its credit card business back in 2014, 2015, and currently has about 5% market share. Now, the challenges on the credit card front are more internal, because they have shifted the collections to in-house rather than outsourcing it to third parties. And this transition will take some more time. That's what the management has said. Until that transition takes place, maybe by the end of third quarter, there will be some bit of pressure in the credit card business. When it comes to the microfinance book, it is under pressure, and that's an industry-wide phenomenon, which is also something we saw in Kotak Mahindra Bank's earnings as well, right? So, aside of that, the bank will also focus on the quality of its portfolio by generating more business from its existing clients rather than prioritizing portfolio expansion. So, these are some of the changes the bank is looking at, and these are all internal issues. But in terms of what brokerages are saying, I just want to say JP Morgan has a neutral call. The target price has been cut to 225 rupees from 270. And of course, they've noted the fact that it's the stress in credit card and MFI business that have created stress in the third quarter performance as well. Advances growth slipped due to slowdown in unsecured lending. And JP Morgan has also said that they expect the growth to remain below their guidance in FY25, given the uncertain credit environment. Key positives, according to JP Morgan, was improving return on asset for wholesale and secured business. But positives were far outweighed by negatives, as weakness in the unsecured business drove the decline in the return on asset to 0.64%. Valuations appear cheap, according to JP Morgan, at 8 times FY26 price to earnings, but the scope for re-rating is limited in the current environment. That's the kind of view that's coming in from the brokerage house JP Morgan. But looking at the stock performance, it's down nearly 40% on a YTD basis, and till the time earnings see some kind of improvement, expected to remain under pressure. But third quarter, fourth quarter onwards, maybe you could see, as the management has said, that credit card business could kind of stabilize by the end of third quarter. Correct. Maybe it could play out in the fourth quarter.
And in the morning also, I was speaking to L&T Finance, and they said that the microfinance business is clearly looking at headwinds, because a lot of state government welfare programs were being withdrawn. A lot of changes happened on the ground. There were flooding in certain areas. There were some macro issues in some areas of India. So I think MFI as a sector, we have seen a big derating in earnings this quarter, and that trend continues, not only with banks but with smaller size NBFCs also.
That's true, Yatin, but those were all the stocks on our radar this afternoon. But lots of earnings lined up tomorrow. We have a lot to react to. Bajaj Finance, Zomato, Paytm, Varun Beverages, Indus Stars, Persistent, Coforge, all these mid-cap IT names as well, and M&M Finance as well. And of course, we have that Hyundai listing also tomorrow, right? So
yes.
yeah, so lots to digest tomorrow. Of course, we will be getting you or decoding the numbers for you tomorrow itself when the numbers come out. But for now, I think it's a goodbye from me and Yatin. Thanks a lot for tuning in. Have a great evening and come back and join us on Opening Bell tomorrow again at 9 a.m. But stay tuned to Money Control for all your other news and updates till then.